Hello, good morning, everyone. You're most welcome to today's market snapshot. My name is Norbert Kiza, and I'm happy to be with you guys today for the market snapshot. So today we have quite a bit that we're going to go through. We are going to start by just looking quickly at what's happening in the markets, and then we shall quickly have a view at the ADP data that we can expect today, and then we shall cross over to the charts. Yeah, awesome. So let's begin. So looking at how the markets have been so far today, we're essentially seeing that we are seeing a bit of recovery on some of the markets, especially on the indices. The indices did relatively badly yesterday on the back of the India election, which of course caused a bit of a risk of trading. But that risk of trading, actually, we saw a bit of a recovery into the US Open. So we have seen that that is now trickling in today's session. Looking at gold and of course silver. Uh, Gold and silver had a very tough day yesterday because they were all had a very big sell, but we saw them recovering into the late US session trade, and also a portion of today we're also seeing there's a bit of a recovery. Looking over at forex, yesterday we had the JOLTS data, which we shall check on the charts, and the JOLTS data indicated there's a bit of a risk of recession in the US because the jobs openings came out much lower than expected. And of course, we're now waiting to see how the today's ADP data comes out for us to get some indication of how employment numbers are looking like in the US. So this essentially is how the markets are trading as of today. Today we also had some data coming out from China, which is the Kaikin China General Services PMI that rose to 54 from 52.5 for the month of April, of course, indicating some bit of strength there for the Chinese economy. Right. So let's cross over to quickly to see some of the headlines that are moving markets as of today. We are seeing Asian stocks rise on rate cut wagers. Of course, that rate cut narrative seems to have come back a bit into the market. We're also seeing some news coming in from Tesla. Tesla seems to be working closely with NVIDIA. We are seeing that Tesla likely to spend 3 to 4 billion on NVIDIA hardware this year. So of course, these are two of the world's biggest companies, and we are seeing that they're going to be working together. So this is likely going to have some good moves, especially for the NASDAQ. Crossing over to the calendar, this is what we can expect from the calendar. So let me just speak briefly about the job openings we had yesterday, and then we can now look at the ADP data that we can expect to come out today. So for the job openings data, we had job openings data coming out yesterday at about, the data came out at about 5 p.m. yesterday, and we saw a bit of movement on the markets. Okay, yeah, so let's look at the data. Yeah, so we had a bit of data yesterday, which is the job openings data. So the job openings data actually was, for those of you that might not be aware of that data, it was actually dollar bearish because we saw a drop from about 8.35 million jobs to about 8.059 million jobs. So that drop essentially was actually bearish for the dollar, and of course we saw that resurgence of that narrative for rate cuts. Us having a slowdown on job openings essentially would mean the Federal Reserve would need to act quickly for them to bring in those rate cuts soon. Yeah, so essentially when we got the job openings data, the market was a bit choppy. Gold sold a bit. We saw some sales coming in for the indices. But since that data was actually bullish for these risk-on assets, we saw them recovering steadily, and I'm expecting today that we need to see how the market progresses from the ADP data. So for those of you that do not know ADP focuses on private employment. Okay, so the difference between the NFP and the ADP is that the ADP focuses on private employment, and of course it also excludes employment in the farm sector. Okay, so looking at the ADP numbers today, we're expecting there to be a decline from 192k to 173k. So when you come on investing.com and click on this number, you can essentially then get a view of how the ADP data has been doing over the past months. So as you can see here, most of the data has been relative. It's been in some kind of, it has been within the same, area or range for quite some time. So looking at the ADP that we got last month, we got ADP that came out at 200K, then we also had 100K, 158K. So we've been oscillating around there. Of course, for the bigger part of 2023, we know that the economy the US economy was relatively weak, and that explains why we had those dips to 189K. So what I'm expecting for ADP today is that we should get a relatively strong number, somewhere upwards of 200K, possibly to even as high as 250K. So should we get a higher ADP number, we should see a resurgence of a stronger dollar. However, the strength of that resurgence might not be too high. The reason for that is because already we've gotten a disappointing jobs number, job openings number that we got yesterday. So the DXY is relatively weak. I think if you guys even recall from yesterday's trading, we saw a bit of a weak DXY, and the reason for that is simply because of that job openings data. Now, how to trade it? Going into the release of the data, I might not really look into opening up any trades. However, what typically happens and how you can approach it is you can just when you come to the data, you can wait to see how the data comes out. So the data is coming out at 3:15. So if the data comes out a bit, if it comes out lower than 173K, that's already a sign that we should be looking for potential sales on the dollar. And of course, if it comes out higher, then I think we should see the dollar recovering quite nicely to the upside. So that, of course, is the main data we have today. For those of you that are trading anything that has the Canadian dollar, you have the Bank of Canada interest rate decision, which is going to be coming out at 4:45. So that interest rate decision, we're expecting a slight decline from 5% to 4.75%. If the number comes out even lower than 4.75%, then we should potentially see a much lower Canadian dollar. Now, I know that the Bank of Canada has not really indicated that they are going to cut rates soon, so I don't expect that much of a reaction from today's interest rate decision. Most likely, they are going to come back with their usual narrative of talking about how they're taking their time to observe inflation, see that inflation comes down to their target. So I think the reaction for the Canadian dollar most likely is going to be a weaker Canadian dollar. So that should give us a chance to sell the Canadian dollar. Now, later at 5 p.m., we have services PMIs. So the services PMIs are going to come out at 5 p.m. today. And we should see a bit of a reaction from the market there. But the major focus for today, guys, is that ADP number. So that's what you should give attention. Awesome. Now, I just want us to view some news that I've been seeing regarding the pound sterling. So I'm sure most of you are aware that the UK, we're going to have general elections in the UK, and of course in England actually, and those general elections are going to affect the pound. So on one hand, we've been getting some indications from the Bank of England that they are going to look into cutting rates soon enough, and possibly we should then see a bit of a sell for the pound sterling. However, there's also some indication here. There's a story I'm getting here from some news site here. It's saying that pound sterling at risk of a summer correction against the euro and the dollar. So this is likely to be on the back of the election. So if the elections do anything to the pound, it's going to be to weaken it. And of course, on the other hand, if we also get rate cuts from the Bank of England, I think the pound is going to start selling off. Now, you can get some time and read through this article, but just for the main points, we are seeing the election news hasn't had a negative impact on the sterling so far, but noise could pick up if polls show the incumbent Conservatives narrowing the gap, thus increasing uncertainty, says lead FX strategist at Covera. So this, whatever happens over the next few days, is likely going to have an impact on the pound, most especially the rate cuts. If we get any indications of rate cuts, that's likely going to have an impact on the pound, and possibly we should see a reaction there. Now, back to this, of course, we also have ECB. The ECB is also going to, rather the Eurozone, they're going to have parliament elections. So that is also going to have an impact on the euro. So if you're trading anything that has the euro, expect there to be some bit of weakness from the euro. Now, of course, I've already mentioned this, but yesterday's job openings data definitely brought out some bit of indication that the Federal Reserve is going to have to act very soon regarding cutting rates. Already we are seeing inflation, the inflation data that has been coming out of the US has been coming out relatively weak. We've seen this with the CPI we got last month. We also saw this with the GDP that came in last week. The GDP data came out, the previous was 3.4%. We got a reading of about 1.3%. And as if that's not enough, the job openings data has also come in weaker by about a few hundred thousand jobs. So I think the Federal Reserve is going to act soon, and I think this is going to potentially have an impact on the dollar, where we should relatively see relatively weaker dollar. Now, I guess now it's time to cross over to the charts, guys. We have quite a number of charts to look through, so let's cross over to the charts and see what we can expect on the charts. If you have any questions, you can share your questions, guys, so that I can go over them. Any questions, guys? Okay, so we're going to start with the Dow Jones, which of course on FX Pesa is available as US30Roll. Now for the Dow Jones, of course, from when we met on Friday, I had indicated to you that we are looking for a push higher on the Dow Jones. So we got that. If you watch the Friday snapshot, I actually shared a nice setup for the Dow Jones for a buy. And of course, by Friday evening, we had a very nice move to the upside. Now, to put things into context for the Dow, I just want to move from this area here. So the Dow Jones from late April into the start of May, we got a nice swing move on a Dow Jones from about 37,700 to as high as 40,080. So this area here is where the Dow Jones topped up from. It topped at 40,100, and then we had a move lower for the Dow Jones. Now, the move on the Dow Jones, the move lower on the Dow Jones paused last week on Friday, where we saw it stopping at this level here. And on the Friday snapshot, if you recall, guys, we indicated that we're having a nice formation of an ascending triangle. So we broke out of this range quite nicely, and we are now trading. We now traded up to this level here. Yeah. So now this is where the Dow Jones has a deadlock. The deadlock is at 38,800. Now, if you go on the H1 time frame, you're going to see how clear this range is. Okay, so we broke out of here and we have now gotten stuck in some kind of a range. The Dow Jones had failed to break this level. That was yesterday. We failed to break 38,800. We tried it again today during the Euros before the Open of London. It stopped. It failed to break again. Okay, so right now the deadlock for the Dow is here, right? But I want you guys to monitor that if you go on the higher time frames, we are currently in a downtrend from this peak level that we had at the beginning of May, rather towards the end of May, right? So now if you're trading it, the idea would be to look for session highs and look for trades selling into the session, selling from the session highs, just like we had a high today. If the ADP data comes out lower today, the Dow Jones is going to come and test this low that we had, okay? Possibly break below it and move even lower. For us to move higher, we need to take out the liquidity at 38,800. If we fail to move above 38,800, then I think the Dow Jones is going to start moving lower. Now, keep in mind that we also have the NFP data coming out on Friday, and that NFP data is going to have a big impact on how the Dow trades. So we need to just keep monitoring it to see what happens there. Keep in mind though that we are in a swing, downtrend swing from here, okay? So there's typically going to be relatively a bit of weakness on the index, and you can see it as you move from the higher time frames to the lower time frames. You can be able to observe weakness there. Now, crossing over to NASDAQ, this is how NASDAQ is looking like at the moment. So NASDAQ also was unable to hold price action above this level here, and it also got into a swing downtrend that was able to hold at this level of 18,200. Okay, so after holding from this level, the NASDAQ started moving higher. But as you can see, similarly to the Dow, it's also not managing to hold price action above a particular level. So if you go to the H1 time frame, you can see that we tried this level here, we sold back below it, okay, bought back again, right, and then of course sold, tried to buy again, but you can see it's again failing to break above this zone. So ideally for me, how I would approach today is I would look for sales on the NASDAQ, possibly towards the 50% retracement level, which is where the NASDAQ had its most recent low. If we take out the low at that 50%, then I think the next level will be to aim for the 38.2% fib level, which is around 18,241. Now, I know compared between NASDAQ and the Dow, the NASDAQ is the one that recovers quite nicely from its session lows. And that's why if I'm looking for something with more volatility, I would want to focus on that, on the NASDAQ as compared to the Dow. Now, if you go to the much smaller time frames, let's go to the 15-minute on that NASDAQ. This is what it's been doing, okay? So as you can see, we broke slightly below our discount zone there on the H4 time frame, on the higher time frame, held a bit of support at that level of 18,200 and moved higher. So now for trading today, what I would focus on would be yesterday's low, okay? This was yesterday's low, somewhere around here. So we'd be looking for sales, possibly to yesterday's low, and hold our stop loss slightly above Monday's high and also London's high. London's high is 18,700. If we fail to take out London's high, then we are bound to move lower, okay? So my first take profit would be at this level here. If we take out 18,500, then we're going to be aiming for this level right here of 18,400. Yeah, now, similar to the Dow Jones on higher time frames, we're currently in a downtrend swing, okay? We're in a downtrend swing, and this is likely to continue, taking us much lower into the course of June. Now, I just want to speak briefly about typically seasonality. Okay, so May is typically seen every single year in the stock market as a bearish month. Okay, so we noticed that the entire month of May, the indices were actually bullish. Okay, and it's only towards the end of May that we saw the selling begin. So we have to wait and see. It's likely that maybe we're going to have a lower high created on the indices. If this is the high from May, possibly the lower high is going to be somewhere around here. Okay, if not here, maybe even higher. Okay, and then when we achieve that high, then we are going to start another downtrend swing. Okay, something like this. Okay, so that's likely possible. Yeah, now if this doesn't happen and instead we break above here, we shall be aiming to take out May's highs. Okay, yeah. The only difference between this year and other years is that this year is a bull year. Okay, this is a bull market we are in, guys. So we're going to have more than usual buying than selling. So for GBPUSD, before I go to USDJPY and EURUSD, I have a setup for a descending wedge on GBPUSD. GBPUSD has been having a lot of bullish setups. Okay, I think it's been having a lot of bullish setups for like since mid-May. We've been looking for buys every other day and every other market snapshot. If you have been watching our snapshots, we've been looking for mostly buys on GBPUSD. I mean, from having higher lows to having setups of descending, ascending triangles to having nice setups of descending wedges, just like the one we have now, where I can expect we're going to have a move higher on GBPUSD on the H1 time frame. Uh, the only impediment to this move higher is going to be the data we get today from the ADP. If the ADP numbers come out above that reading of 192K, guys, we're going to have a nice sell coming in for GBPUSD. But at the moment, you know, most setups are pointing towards a buy for this asset, and I think we are going to observe to see what happens. Now, I'm just from showing you guys something online about the pound, and how they have elections towards the start of July. So if there's anything that's going to weaken the value of the pound over the next few weeks, it's going to be the election. Okay. So if we see some bits of bearish momentum on the pound, then we should be looking for potential sells. But right now, there's really not that kind of indication that we are looking for sales yet on the pound. We seem to have peaked here, okay? For now, that's the level of 1.28125, okay? But I'm expecting if we do not break above that descending wedge to look for a buy, then we are likely going to look for a sell, and this sell is likely to take us back to these zones here. Now, on the H4 time frame, the pound is trading in a premium zone, okay? When you go on the daily, the pound is still trading in a premium zone, okay? It's still trading above that 50% retracement level that we drew from the low that we had in July, okay? So which means it's likely that we could see a much stronger pound, especially if it keeps within that premium zone. But as close as we get to the elections, the weaker we are going to get. So for trading today, guys, just to repeat before I move to something else, we have a setup for a descending wedge, which typically forms whenever we have a rising market. Okay, so if we see a break, above that descending wedge, then we should be looking for potential buys. If we fail to break above the descending wedge, then we should be looking for sales for this particular asset. Okay, so that's what I have for the pound for today. So let's cross over to USDJPY. So USDJPY has a nice setup for a descending condescending wedge. We had a bit of a pullback yesterday, which some people are calling they're calling it, what is it? They are calling it an intervention, okay, stealth intervention, right? So if there's anything to go by, and if you guys at least have been listening to the snapshots we've been covering, and just to look at previous price action for USDJPY, you've noticed that whenever we've been having an intervention, okay, whenever these guys intervene or the Bank of Japan intervenes on the yen, we typically tend to see a strong recovery every single time we see that sell. Okay, so you can see we had an intervention here, sold off from those levels, recovered from the sell. We had another intervention here, sold off from those levels, recovered from the sell, and now we are currently recovering from the most recent sell-off that we had yesterday. So my setup for GBPUSD is for USDJPY is very simple. It's a setup for a buy. We have a nice descending condescending wedge that we're able to break out above this area here. and the momentum right now is presenting a bullish pattern. Okay, so I'm looking for buys on USDJPY, possibly to this level here. If we take out this level, then it's likely that we're going to move higher and possibly even move as high as 160. But for now, I'm bullish on USDJPY. The best entry point would have been here, okay? But of course, as you can see, we have already moved higher from that level there. So you might want to wait for a bit of a retracement, possibly below that 156 level there, and then you can look for a buy. So let's cross over to Euro USD. So Euro USD, I also have a setup for it on the H4 time frame. As you can see, we are able to break out of this zone very nicely. That was around this area here. This, meanwhile, is also descending, condescending wedge. Okay, so it's a setup for a buy. And at the moment, I'm bullish on GBPUSD. Okay, if we are going by yesterday's data, we should be looking for a buy on Euro USD. Okay, however, just look at it on higher time frames, guys. We are sitting at very, very, very tricky levels for Euro USD. Okay, so you can see when we go to this zone here, we got into some selling momentum, and we are now back into that area somewhere around here. Okay, so if we manage to hold this zone, possibly something like a sell, which it's currently in, and then a retest of that zone and a move higher. If we take out this level here and this level here, then we are bound to move higher. Okay, now if you're trading Euro USD, I want you guys to listen to this. This is very, very important. Okay, this is very, very important. We have the ECB press conference and interest rate decision this week on Thursday. Okay, this week on Thursday. The ECB has been indicating, ECB is the central bank for the Eurozone, and they have been indicating that they want to start cutting rates soon. Okay, for those of you that do not know what rate cuts mean, they are something simple. They mean that they are going to reduce the benchmark rate that the commercial banks borrow from the central bank. Okay, so when that rate is reduced, okay, it means that the amount of money that's going to be available to the public and to the commercial banks is going to be limited. Okay, rather it's going to increase. Sorry, that's a rate hike. For rate cut, it increases. So when it increases, it's going to potentially reduce the value of the currency. Now, I suspect if there's anything that's going to be a catalyst for a weaker euro, especially this week, it's going to be what's going to come out of that ECB conference. Okay, so when you come on the higher time frames, let's look at levels now. On the H4 on the daily, this is where we can expect some selling to begin. At this point right here, which is likely the potential peak for the euro, somewhere around here. Okay, if we fail again to manage to hold price action along these levels where we are at the moment, I'm expecting us to break below this week here and possibly trade back into that wedge, okay, over the course of the day, over the course of the week. Okay, that is if they indicate that they're going to start cutting rates soon. Okay, so if you are a buyer on Euro USD, your stop loss for any buys, rather, your stop loss for any buys should be around this level here. Okay, around this level here. Once we break that zone, guys, we are going to start moving down into that wedge. Okay, and you do not want to get yourself trapped in a trade for Euro USD when we are starting the descending. So you can see we started selling from here. That was in April, and the selling for Euro USD is going to start soon, depending on what happens during that ECB press conference. For now, the setup is a buy for it, and we are buying. Okay, we are buying aiming for that key level of 109. If we fail to take out that level, guys, and we instead sell, your stop loss should be at the start of this descending wedge, so that in case the market comes back down, you're protected for any further downside. Okay, so the two catalysts to wait out for is the ECB conference and of course the NFP. So now we go to gold, which is our favorite for most of you, I'm sure gold is your favorite. So we are going to start with looking at gold on the daily, okay? So on the daily, this is what we have on gold, okay? Gold has a multi-day demand zone that it has been holding on for a long time, okay? From April's NFP, gold was unable to maintain price action below this level here, okay? Let me just mark these points here so that you guys can see the prices where demand is seated, okay? So we broke above this zone, okay? And we saw the market moving very nicely up here, okay? So of course, this area here where gold is at is a very key supply zone, and it was unable to hold price action, and we saw gold coming back down, okay? So when gold got into this demand zone, it held price action here between the level of 2,272 and of course this level of 2,287. Now, soon after that, gold moved higher, okay? Meanwhile, guys, just to put things into context, this NFP that we had last month, okay, was actually bullish for the dollar. I remember those NFP numbers, guys. They were actually very strong, but gold failed to sell. Okay, so we saw it getting into this zone, moving back higher. Okay, and of course getting into that supply zone again, and of course selling again from there with a nice setup for a descending triangle. Now, yesterday we were looking for buys on gold, simply because where gold is trading at right now is actually a demand zone for it. Okay, it's a demand zone for it. Anywhere here is a demand zone for gold. That's why you see that on Monday we failed to break below 2,319, bought back above that zone. To yesterday evening, after the job openings data that were actually bearish for gold, were actually bullish for gold. We actually saw gold also failing to break above this zone, and we saw gold buying. Now, today's ADP is going to be very important for gold. If the ADP comes out bullish for the dollar, gold is most likely going to break and possibly go into this demand zone, okay? Now, if gold fails to hold support within this area like it has been doing for all these days here, I think the next level for gold is going to be 2,450, 2,445. Now, regarding the fundamentals, I saw some news online that the China gold purchases have reduced, especially in this quarter. So that is also providing some weakness for gold. One of the reasons why gold has been trading much higher has been because of Swiss exports from Switzerland to China, and of course even some retail demand for gold from companies like Costco and all those online stores for gold where people have been able to access gold. So at the moment, what I can conclude for gold here is that we've been having price converging within these demand zones here. Okay, so we've been having price here. It breaks above. Of course, you know this is a multi-resistance zone for gold. We had a resistance here. You know, went back down. You know, broke above here, moved back higher, went back down, held support at this level here, moved back higher. You know, so it's been just really converging around there, and we are potentially waiting for what comes out of ADP or NFP. Okay, yeah. Now, if you were to ask me what the bias is for gold, at the moment, I would say, okay, looking at it on a higher time frames, we are typically having some kind of a bearish bias for gold, especially since it's been having several bearish setups, especially from these levels here. But on the lower time frames, gold has been holding price action quite nicely. If you look at it on a 15-minute, which is of course is a tradable time, you can see here it's been holding these levels nicely. So we bought off this level here. As you can see also here, we also bought off this level very nicely. And even from these levels here, generally gold has been holding price action very nicely. Okay, so just keep an eye for for today's ADP and see what happens. So we're either going to have a break to the downside into that demand zone, or we should see gold breaking above and possibly aiming to take out that resistance level of 2,358. All right, so it's question time, guys. If you have any questions, now may be the time for me to handle your questions on anything. It could be on what we've covered. Excuse me. Yes, Malombe, how are you? How's the morning? You're saying, do you think there's any correlation between time and price? First of all, there is one, and it's a very, very strong positive correlation. The markets evolve around time and price. Everything about the markets is about time and price. Okay, time, when you look at the session opens, session closes, that is when you have volatility. That is when you have more than usual price action. So trading and picking a particular time to trade is very, very important. Now, the other thing also about time and price is typically we tend to get, for instance, if I'm to look at indices, for instance, indices typically will create session highs at open. Okay, like yesterday, we had a session high at open of the session. Okay, and then we saw the market creating a low towards mid session. Okay, and then moving up higher to create another high during the open of London, right? So what I would advise, especially if you are a day trader, you should ideally be focusing on trading whenever the markets open, because when the markets open, you have more than usual price action. Now, the other thing also about time and price is you might also want to focus on how the market evolves around the close of the session. Like, for instance, if you go to the Dow Jones, if you go, for instance, to how the Dow Jones did last week on Friday, okay, the US market typically closes around between 10:30 to 11 p.m., right? And around that time, we actually saw very big spikes, okay? So you can see this was at 10:45. We saw a big spike, and then we saw an even bigger spike, right? So ideally, if I'm someone who trades indices, I might actually be more productive trading towards the close of the session, because for the bigger part of the session, the market is not making up its mind about where it wants to go, right? Now, if we go to yesterday, we saw a lot of ranging on the Dow Jones, especially around this area here, okay? Yesterday was the fourth. So you can see here, we were stuck here for some time. We sold a bit, then we got stuck here, and then we saw a spike. So this spike did not come until wait, yeah, we had some ranging here, and then we saw a spike. So this spike did not come until 8:30. Okay, so I think it might be better for you to focus typically during mid-session, session open, and also towards the close of the session. Yeah, that's for me. That's how I approach trading when it comes to sessions. Now, the other thing also is when it comes to indices, especially, okay, you will not, especially if you're trading US indices, you're not going to see a lot of volatility until their afternoon session when they're back from lunch, right? In the morning, most times there's a bit of sluggishness on the markets, but in the afternoon, which is of course US time, and for East Africa, that's about 8 p.m., 9 p.m. That's typically when you see a bit more volatility on the market. All right. Now let's see. Malomba, I hope that helps when it comes to time and price, but it's a very, very big and complex area. So really the discussion can go on and on with it when it comes to trading these indices and other assets. So the next question, hello Norbert, at yesterday's job openings, why did we see a weak dollar then a strong dollar? So yesterday's job openings data was actually bearish for the dollar, guys, because we saw the data coming out Just a moment. I just want to stop my screen so that I can go back to my calendar. So we're just going to quickly review the JOLTS data. So the JOLTS data is right here, guys. And the JOLTS data was actually bearish for the dollar, right? Because we had a drop on that number. We're expecting the number to come out above 8.37 million. It came out at 8.059 million. So this was actually bearish for the dollar, okay? So I think even at the moment, we are still seeing a bit of some relative strength on relative. This is a bit choppy today, right? Going by the JOLTS data, the market is still indecisive about what it wants to do, and I think maybe most traders are focusing on ADP and as well as also the NFP for Friday. Yeah. So of course, it's just typical price action. That's why sometimes you need to focus on the technicals, focus on what the chart is doing. Sometimes you get the market doing something opposite to what you would expect, right? Yeah. Like yesterday, I mean, if you are trading gold, yesterday gold was a sell, just basically on a price action that gold was presenting, okay? It kept presenting a lot of bearish momentum from Europe open to the open of US, gold was a sell, right? So regardless of what the JOLTS did, I ideally would be looking for a sell on gold, right? Regardless of what the JOLTS did. Malombe, you're saying, in regards to time and price, do you think it also affects the days to trade apart from the sessions? Yes. So the best days to trade are usually from Wednesday to Thursday, okay? Because Mondays are typically seen as days when it's a new week, right? So every single market player is getting started for the week. They are setting themselves up for the week, looking for what's going to happen within the week, what can we expect within the week, so things like that. So ideally, the best days to trade, you want to focus on Tuesday, from Tuesday through Thursday. Sometimes on Friday, you typically have a lot of volatility, especially if you have some key news events, like for the indices or for the stocks during earnings, if it's during the earnings periods. And of course, if you have news like NFP, CPI, PCE, all that typically tends to affect the market. Yeah, but Mondays tend to be sluggish. Fridays also tend to be sluggish. So you want to focus more on Tuesday, Wednesday, and Thursday as the best days. Yeah. I have a problem in drawing zones for price action. Assist, please. So now for me, I usually draw my zones using many things. So I'm big on patterns. So I use a lot of patterns, okay? But in addition to that, I also use a bit of a few ICT concepts, like the liquidity sweeps. I also look for imbalances on the charts. When I see typically some side of like signs of sell side imbalances and buy side imbalances, it gives me a picture that maybe the market is bearish or the market is bullish, right? Now, the other thing that I also do is I also use my moving averages, especially in the higher time frames. For instance, like if you look at the Euro USD on a higher time frame, you notice that on the H4 time frame, we have not had a death cross as yet, okay? And if you look at typically how the price action is, if you guys recall, last week, we had a nice W pattern formation on Euro USD, okay? And in addition to that, we're also having higher lows on Euro USD. All this points to some kind of bullish momentum for the pair, okay? So in a nutshell, you want to have some sort of like confluence, okay? You want to have some sort of like confluence, so you can use trading patterns. Then you can also use your averages. Then you can also use a few ICT tools, maybe like the imbalances. You can also use the sweeps. Sweeps usually help me a lot. Whenever I see pin bars or sort of like liquidity sweeps, it typically shows me that there's strong demand to the upside. And I tend to focus more on those areas there. Now, these boxes that you see here that I tend to draw, tend to just show me where we've been having selling momentum kicking in. So you can draw boxes or you can draw circles, whatever it is. Now, the other thing also is it's always important for you to organize your price action in two channels like this one. So for instance, like on Euro USD, you notice that we have been in a rising channel from 15th of April upwards up to almost mid-May, okay? So until you organize it in a kind of channel, you want to be able to tell that you're in some kind of a rising pattern on the pair, okay? So that's how, yeah, that's typically what I tend to do. Yeah, but whatever works for you, whatever works for you. All right, any other questions? What is the relevance of NFP? Why are most important news at 3:15 and 3:30 respectively? Yeah, that's a very good observation. We tend to get a lot of news around that time. So now for us, remember we are in East Africa, okay? We are in East Africa, and in the US, that's usually morning time for them. So that's around 9 a.m., if I'm not mistaken, about 9:30, right? Yeah, so that's around the time we tend to get news, okay? Now, if you guys have been watching FOMC meetings, you notice that FOMC meetings are typically in the afternoon, and that's not until 10 p.m. our time, right? So you count about 7 hours from the morning time. NFP is typically around morning time, okay? So I don't know about Kenya, but in Uganda, our CPIs are released by the Uganda Bureau of Statistics, and they typically tend to release them in the morning time as well, okay? Around 10 a.m., yeah, 10 a.m. is usually the time. 10 a.m., 9:30 a.m., okay? Yeah, so it's just that we're in a different time zone. It has nothing to do about the afternoon, but for them, they release that every country releases data in the morning, whether it is even the UK. If you check UK is about 3 hours behind us, or 2 hours behind us sometimes when there's no daylight saving, but they all release their data in the morning, okay? Yeah, so it has really nothing to do about something significant about 3:30 or 3:15, but it's data is released in the morning time for most countries. Yeah, awesome. Do fair value gaps and order blocks work? I don't use fair value gaps a lot, okay? But if you want to identify a fair value gap, essentially what you're doing is you're looking for instance, like when you go, let me just get a plain chart for you here, okay? If you get, for instance, like USD card, okay? If you have USD card, for instance, here, okay, and you go say on a H4 time frame, okay? Now on the H4 time frame, what you'll be looking out for is something like this, okay? So what the market did here is, okay, let me go to the daily. So this is the daily on USD card, and I want to identify maybe a fair value gap that's there maybe on the daily, okay? So how do I identify a fair value gap? If the market creates an imbalance, okay, if the market creates an imbalance and moves higher from that imbalance, for instance, like here, we saw the market buying from this area here. So it moved from here and moved all the way here, okay? So you can see that the time when this imbalance was created on USD cards, there was a fair value gap that was created, okay? And this fair value gap kept getting, okay, so the fair value gap is here, okay? All this is the gap. And now to look for the area that hasn't yet been filled on this entire imbalance move from here up to here is actually this one, okay? So when a market creates an imbalance, it could be maybe the buy side or sell side imbalance. What a trader does is that you want to sell into that imbalance, okay? So for me, ideally, I would maybe tell you guys that, there's a fair value gap on USD card on the daily, and I should be looking for a sell into the gap that is currently within this zone, okay? One that has not yet been filled on a daily. Now, that's one way to look at it. The other way is maybe to use a pattern. So for instance, I could also use a pattern Yeah, I could also use a pattern and perhaps maybe have like a, a descending pattern, or maybe have something. It could be even be an asymmetrical triangle. Okay, so ideally I'm looking for a sell below the break of the symmetrical triangle. So one trader is looking for a break below the symmetrical triangle. The other trader is looking for a sell into that fair value gap that was created on the daily, right? Yeah, so I tend not to use fair value gaps too much, but I'm aware that the gaps are there. You get it? So much as I may not mention them, uh, I'm aware that they are there, and I know that there is an order block that was created, on the daily, and the market has moved, into the key area, and it's going to come back into that area. Yeah, so it's a given. It's a given. If you, as long as you know it's there, and when you're doing your analysis, you're aware that it's there, then you actually don't even have to write it there. Some things you just know that it's there. Yeah. So for me, that's how I typically tend to approach it. So awesome. Guys, that's it from me. I wish you all a happy trading day. For those of you that maybe are joining us for the first time, you have information within the bio. If you're a new trader, you can open up a new account. You check out all the resources there. If you're currently trading, we have a lot of resources for you, and you can check them out and see how to improve your trading. That's it from me, guys. I wish you all happy trading, and we meet on Friday for the NFP playbook. Cheers, guys, and happy trading.